All right. So welcome to Game Plan Sunday. Today is June 20, 2021. We're here with the squad today. We're going to talk about what happened in the markets last week, what's coming down the pipeline, so you guys can, get your game plan together for the week. So last week, everything was all about the Feds. We had the FOMC minutes meeting concluded, and Powell basically saying that it's time for them to start talking about raising those rates. For you guys who don't know, he put the extra emphasis on, we're not even thinking about raising rates. That's been setting the mood of the markets. But that changed this past week because inflation is getting out of line. Now, inflation is one of those genies that you don't want to let out the bottle. So they're playing a dangerous game right now. In this very experimental economy that we have right now. We haven't seen anything like this, okay? You really have to do your history lessons to understand what is going on, what is taking place. You got to go back to the Great Depression of the 30s. You got to go to the inflationary period in the 70s in America. I mean, you got to go to Germany, Weimar, okay, to understand, to get some kind of grasp of what's taking place here and the logical outcomes of this thing, okay? So, that's pretty much, was what was covering the markets. As far as trading goes, for you guys who've been in the trade room on the website, day traders been in day traders haven, the meme stocks continue, we have some NASDAQ stocks that's doing anything as well. But, for the most part, man, the dollar came out strong. Excuse me, the dollar was strong. So from past game plans Sunday, I told you guys we're going to have to watch the dollar. Remember, I told you that. Okay. And I told you when that dollar gets strong, that's going to be bad for equities. So that's what happened. Okay. The dollar was strong. So you got to watch that strength of the dollar. Bad for equities. Okay. So equities super choppy. All right. Equities is down. All right. For the week. So equities is down for the week. Everything was down for the week. Gold got smacked up. Okay. We'll talk about a little bit about gold later, but everything got smacked up. Bitcoin got smacked up. Everything. Oil actually did great. So oil was up and we had the dollar that was up and the rest was gambling. Okay. So you understand, prices are all over the place. It's crazy right now. Fundamentals, any training that you probably had is probably got you wondering, did you choose the right religion? Because you're trying to figure out why fundamentals and all this other stuff that you spent so many years trying to learn ain't working. Well, that's because of all of this intervention in the economy. You're not dealing with a normal cycle here, okay? We're looking at bubble phase economy, okay? When you see bubbles, when you take a look at bubbles back in history, they all look like this. It's crazy, okay? It is chaos, and it's because of the intervention of the feds and the government, okay? So, just coming off this week, Juneteenth, happy Juneteenth to everybody. Today is actually Father's Day, so happy Father's Day to all my fathers out there doing your thing, you feel me? My favorite part of life is actually being a father. I have a school bus of kids, okay? And kids that ain't my kids, I'll raise your kids, okay? I love the kids. I love the children. They are the future. And we have to do our best to get them off the path that they're on. Right now, with what's popping in culture, it's very toxic and demonic and all of that. And so if you got some kids out there and they want to learn, man, put them in the game right here. Get them in the academy, Wallstreet Jackboyz. Get them on our wings and, man, try to get them onto this money game, legal money game, okay? It's like playing a video game, they'll get it. But anyway, shout out to all you fathers out there. So just taking a look here on my chart right here, I got the treasury yields, okay? This is going to be important. When we was predicting a recession to come, I used to pull up the charts quite often, haven't pulled them out as much because it's not necessary, but it's time to start taking a look at it because all of this has implications of the market, okay? So what we're seeing right now is the yields, okay, are starting to go that way, all right? This is the long end. This is a 10-year. This is a 30-year, okay? The short end is what the Feds control. We can see that's lifting up, okay? So what we're seeing is, okay, because Fed and them talking about, Powell and them was talking about, well, inflation is going to be transitory, this, that, and the third. Well, the markets don't believe them, okay? The Feds in the meeting said that they were actually going to be raising the rates 2022, 2023. This is the consensus that they're forecasting, and they never get this stuff right, okay? You guys can remember back 2019, when they was trying to raise the rates up on Trump, and they was trying to get to that 3% target, and they never got to it. Okay, they had to, capitulate and reverse course. The markets puked. Okay, I think we're going to see the same thing here. The Feds are talking about 2022, 2023. This looks so crazy to me that I think that they're going to be forced to raise rates this year. All right. So we don't know. We got to see how it's going to play out. All right. But all the different things that's happening in the economy right now, I just can't see it. I just think they're going to be forced to, raise these rates. So everybody is still, paying attention to inflation more and more. We've been talking about this inflation thing since the beginning of the year. You go back to any Game Plan Sunday video, and you can see all of the ones from the beginning of the year. I've been telling you guys about this. And there's been other great guys out there who's been saying the same thing, like Michael Burry, who's back out in the game now, calling for, hyperinflation. Peter Schiff and all these guys, have been calling for this inflation. So what happened this past week in the Fed's minutes meeting is Powell came out and basically said that it's time that we start talking about it. All right. So they got to start talking about, when to taper off this economy because it's getting too hot. Remember, the only way the Feds can deal with an overheating economy is they have to raise rates. But see, they use word psychology. Powell he won't tell you that they're going to raise rates. He'll say, we have the tools to deal with it. Understand, like, this is all a mental game. Okay. And the stock market is totally irrational. I'm telling you, it's just stupid. Okay. And so the economics help you on this side here. But just understand that when they say they got the tools to deal with inflation, but the only tool you got is to raise rates. Okay. Now, to raise rates will be catastrophic on the economy because we've just levered up more debt. Okay. We have so much debt in the game. We just, again, when you see interest rates, down here, okay, when they cut rates, they encourage people to get the cheap money. All right. So it's cheap money. But when they raise those rates, people can't afford that. All right. I told you guys the past 2 weeks, housing market is looking dangerous right now, looking freaking crazy. And the Feds are still buying the mortgage-backed securities right now. They're still buying a shitload of them. And it's like, why? Okay. That's how you know that we are in a weak economy. All right. This is why I say we are in a depression. Okay. Because the Fed's tools, they have this tool here, the interest rates. They can control this. Right. And that's what they do. They drop it down to zero. Okay. You have no other place to go. The Feds is in a trap right now. All right. So the only thing they can do is lower these rates. Okay. They do quantitative easing and all this money printing, and this is all negative. Okay. It's actually counterproductive. So it doesn't work, right? It's going to, continue to have this big problem. So all of this is looking really bad. But the reason why I did want to show you that is because because these yields coming down. The bond market, remember, the bond market is like the oracles. Okay. Go back to the class that we have on the website, Time in the Markets. I kind of went over that with you guys about the importance of the bond markets. A lot of traders they have no understanding of what the bond market is or even understand it. Okay. But the bond market, they are, future forward thinking. The stock market too is the future forecasting mechanism. Okay. A lot of things that's going to happen in the future already priced into the markets. Okay. But when you see the yields, like this starting to move down, this is signaling a forecast. Okay. That the market is going to go down. Typically, when you see this go down, you'll see equities will follow. It's crazy. Okay. When you see this go up, equities going up. Okay. So we're starting to see this go down. It is not looking good for equities. Okay. And on top of that, okay, we had the dollar strengthening this week, the dollar with the super strength. Okay. Let me actually just pull this down. All right. We're going to go to the charts real quick. All right. Bingo. So let's just pull up the dollar here. Man, the dollar is super strong. You need to take a look at this formation. Yeah, Topaz. Strong for the Forex. All right. So you guys can take a look at the chart right here. It's clear as day when you take a look at the patterns here. Okay. Dollar, boom, hit that floor. Okay. Right there. Boom. Rejected at the 50. Boom. Hit the floor. Okay. What do we have? You're looking at classic double bottom setup. This is bullish. Okay. Now I was telling you guys last week, it was starting to look that way. And you see, that's what's killing the market right here. Okay. When that dollar strength comes up, this is a double bottom setup. Doesn't mean that it's going to make it past this 50 resistance right here. Okay. But look how big that candlestick is. Look where you're down here. All of this is bullish. Okay. So I have no other way to assess this thing except it's bullish. And this is, if this is bullish, okay, and this bullishness continues, then this will be negative for equities. So I am a bit pessimistic this week. Okay. Doesn't mean we can't make money, because I know a lot of you new traders only show up when the charts are all green, and when things get red and bloody, you jump out the game. But you don't understand, you're missing learning opportunity. Okay. It's always opportunity, whether the market's up or down. Okay. Money is being made every way across the market. Okay. Got strategies for when it goes up, strategies for when it go down. Okay. And if you don't know enough, then I can definitely understand if you want to, sleep on it, take a nap on it. Sometimes you got to take a nap on it, forget the markets today. It's crazy. It is crazy right now. I definitely say that this is a more experienced trader market right now to try to figure this out. But that's why we got the trading room, so that you guys can, interact with each other, get some ideas off each other. You got some experienced traders in there doing it live. Everybody's doing the same thing. So take advantage of the trade room, man. It's 24/7 and it's free. So check it out. Anyway, this dollar spells bad news to me. Okay. So that's how I feel about the dollar and equities based off of that. Let's take a look at the VIX. All right. And again, this is the weekly chart. Let me actually come in on a daily on this one. All right. Here we go. My levels on the VIX. Okay. The VIX is shaping up the same way. All right. So this doesn't spell good news to me. Bingo. Bingo. It's not looking good. You feel me? All right. We got a buy trigger right here that says get in. You see what happened last time? We got a buy trigger right here. Shit went up like that. All right. I don't know what's coming down the pipeline this week, but you got to remember the markets is already anticipating the shit ain't going to be good. All right. So again, that's just more confirmation of the forecast here. All right. Let's take a look at the S&P 500. All right. Let me just drop it down a tad bit. Okay. I got that 4,400 target up there because that's JP Morgan. You got to know what the mainstream, fellas is talking about. Okay. Bingo. JP Morgan target is up here. And you see, we've been rising right here at the 50 moving average. It's been just like that, right? It's been boom, boom, come up, blick up, you know what I'm saying? What we got right here, okay? And now we're getting rejected, okay? This is interesting, according to what I've been seeing. Again, we're talking about the dollar, we're talking about the VIX. It all looks like bad news. If equities break this 50 moving average, it's definitely gonna be bad news. You'll be looking at a drop down here to about 40 to the 100, okay? Double top, that's right. Topaz calling out for you. So we didn't even make it up here to the JP Morgan target, not even my Fibonacci targets, okay? Don't mean that we want sometime in the future, but yeah, this setup is getting rejected and it's not looking good. So price breaks, this zone right here, okay? This line right here, that neck break will bring you down here, all right? So that's the S&P 500. And let's take a look at the Russell real quick. All right. Russell's been super choppy. Okay. Super choppy. So we dropped the iron condors for the sideways action. You guys can see that clear as day. We got a sell trigger that just popped up. All right. So that's going to be interesting. First zone is this 100 moving average right here, blue line. It's got to come right there. And so that's all I see right there. But should we break that, bingo, you come right here to the 200 moving average, like this line right here, this zone right here. And that's not going to be good, okay? So typically I see the Russell will lead. We're in a crazy economy now, right now, a crazy market, so ain't no telling what's going to lead, but I'm going to have my eyes paying attention to that. Okay. Now, the NASDAQ, okay? The NASDAQ is probably the strongest of them all because everybody got this, religious belief in technology, okay? Y'all know I talked about the technologist fallacy last week, technologist fallacy last week. And, so tech still holds up, tech is where it's at. So any opportunities, I believe, will continue to be in the NASDAQ like we saw this past week, with Roku. Roku is a play that we got in this past week. And shout out to Elder. I know she ain't even here tonight, but, Elder, she jumped in the game, got her feet wet. You know what I'm saying? Did her first spread trade. I was able to guide her through it and everything. But, it takes a little bravery and some confidence and a little guidance. You know what I'm saying? So, that's why I built the courses the way I did. So you guys can have the confidence that you need. So you have testing and all that. You got quizzes. So once you finish, you're ready. Okay. But sometimes you need a little extra hands-on. I'm very hands-on with our community. So definitely join Wallstreet Jackboyz. A lot of those other communities, you're paying a lot of money, can't get no hands-on feedback, and a lot of toxicity, across the markets, where people will just take your money and then they'll talk shit to you like you're a dog if you make a mistake or you do something stupid. I'm not going to do that to you here. Okay. So definitely join the squad, man. It's, this is family here for me. So I treat you guys like family, what I'm saying? We get on the horn and we talk it out, so just keep that in mind. And again, shout out to Elder for jumping in the game and executing her first live trade. So definitely she up right now also. So just keep that in mind. All right. And then we talked about, so I showed you guys the yields just to piggyback off of that with the bonds here. Yeah, just to piggyback here. Again, you're seeing the bonds, the prices are going up. What happens to the yields when bond prices go up, gang? Bond prices go up, yields go down. All right. So when these prices are going up, yields go down. That's what we was talking about earlier in the intro when I was showing you guys the yield charts were going down. Okay. So this is the bonds, they're going up. All right. Target right up here at the 200 moving average, about 150, somewhere about 150. Okay. All right. All right. Let's take a look at Bitcoin here for a second. All right. Bitcoin in a very interesting situation. I've been called this game here on Bitcoin for a minute. It's doing exactly what I said it was going to do. Okay. We fell down here to the 200 moving average. You see these two, the 127 extension right here and the 1618 extension right here. I said it was going to chop sideways down in this zone. That's exactly what it's been doing. It's been coming down, choppy. Okay. Now, what's interesting is that we got a sell trigger right there on Bitcoin. All right. You see that right there. Okay. It's at support. So just keep that in mind. It's on a support level, but we're going to test this again, and it may break. So we have to see, how it's going to hold up. It's important for Bitcoin to hold this level because if it don't, it is going to go further down here. Okay. And not trying to, poop on nobody's parade or party here. But yeah, Bitcoin has been getting smacked up, I know a lot of people have this religious faith into it, and trust me, I like what it stands for. But there's no possible way that I can see it overthrowing any kind of government. Not at all. Government always had to maintain control of its money. If you're a student of history, then you'll know that. Most people who are just crazy advocates, they're not students of history or economics for the most part. A lot of Bitcoin guys out there are smart though, okay? But they got this religious belief that it's going to overthrow the government. And I just can't see that happening. Trust me, that'd be dope, but it's not. And I don't trust all things digital. I keep some things in my life off of the internet, outside of digital, because everything is able to be tracked and traced, okay? And if everything can be tracked and traced, then you no longer have privacy, okay? It is important to have privacy for me, all right? I don't want everything in my life to be tracked and traced. So therefore, I am not an advocate for money going digital. because it's just going to give the government more power to control and then go into a complete totalitarian state. Okay, they'll be able to usher in full-blown socialism, and that's what they're working on right now. Okay, now what's interesting is Dr. Michael Burry. He just came out. Y'all know Michael Burry. You know the feds was on him. You know what I'm saying? He shut up for a minute, but he back. He back with that crack. All right, he back with that crack. Dr. Burry, he back, and he talking mad shit about Bitcoin. All right, now you gotta, you know. We got some of it posted on our feed, all right? Because you know, Burry, he just tweet and delete. You feel me? You got to catch him when he rolling, and he coming through with the wisdom. You know, he's the guy from The Big Short. For those who don't know, but he's straight up dropping the charts on Bitcoin, also. And if you take a look at this chart, it's an interesting setup. It looked like one big ugly ass head and shoulders. All right, let me see if I go to the weekly real quick. All right. I don't know if you guys can make it out, but let me get some squiggly lines in here for you. All right. So bingo, shoulder. All right. Big ass ugly head right there. All right. And then bingo, shoulder. If you can see that move, then, you know, just brace yourself. You know what I mean? That's what's going to come out to be. But again, Dr. Michael Burry, you know, we're talking about the geniuses here, the gurus and the legends. You know, this is how they seeing it. You feel me? So again, I know every time you come on YouTube, it's a Bitcoin commercial. They got to pump it. You know, you don't have to pump stuff that's real. All right. They got to pump because they need for you to mentally adopt it as, you know, money. Okay. So it's an indoctrination that must happen. Take a look at the daily chart. You want to pay attention to this right here. Bitcoin has to hold its 200. If it does not, it will break. And you're going to be looking at, you know, 20,000 down there. All right. Cool. All right. So let me actually just go over a couple of headlines, and then I'll take a couple of plays from you guys and we'll call it a night. We'll let all the fathers out there enjoy the rest of your Father's Day weekend. I don't have too much for you guys here. But let me actually just cover a couple of little headlines that we got in here. All right. Bingo. All right, so we got the monthly new residential construction. You guys can take a look at that here. This is posted in here. A very interesting article here that is posted in here. I didn't even bring my book. Jeez Louise. I normally always try to keep a book somewhere, but I got something over here real quick. In fact, let me just go and grab that real quick. Here's the article right here. It's called, they don't hate gold because it's gold. They hate it because it's not government money. You got to understand the attack on gold. They can't control it. As I was just telling you guys, the government would love to have a digital currency, which they are working on right now. And I was telling you guys before that the reason why the government's not messing with Bitcoin like the way that, you know, you would think they would is because Bitcoin is the fluffer. Okay. Bitcoin is the fluffer. I don't know if you ever see, you know what a fluffer is, but they get them right. You know, those are the girls that get the man right before he go with his wife. You know, they got to get him uplifted in spirits before he, you know, go to his wife, you know. So Bitcoin is like the fluffer for the Fed's digital currency. Okay. Because they want people to go ahead and adopt this digital currency mindset. You still got, you know, coin shortages all over the place. In fact, I just seen there's a place in Charlotte called Chicken Coop. They've been around forever, legendary, and they're closing down. And one of the reasons they were saying is because of the coin shortage. Okay. So that's very interesting. We're seeing legendary places are shutting down and, you know, over coin shortage. Okay. So they're trying to usher this thing in. They would love nothing more than to do that. Okay. But gold, okay, if you go to a gold standard, they can't do that. They can't control your gold. Okay. So it's physical, tangible, you know, assets will always have its value. But Ludwig von Mises actually wrote this little article for you guys. And in fact, I'll show you the book real quick because I got it close by. All right. There we go. Yeah, you know, I keep the library on deck, you feel me? So Human Action, this is an excerpt from that. Okay, chapter 17, you guys can read it, educate yourself. We're all about knowledge and education. But take a look at that article. It's on the website, okay? And it's from that big book right there. I know you ain't gonna read the whole thing, but check that out. All right. And you guys can see right here, I don't know if y'all noticed this, mortgage rates little icon on the website. This thing updates daily, okay? Now, those rates were like at 303 about a week and a half or 2 weeks ago. Look at the rates going up, 326. All right. So just, keep our eyes on those rates too. Okay. That's the markets. That's the markets for you. That's tightening up. So those people who qualified, for homes 2 weeks ago, when those rates go up, they no longer qualify. We're talking about the bottom tier people. Those at the bottom tier, as those rates go up, they're no longer qualified. This in itself is tightening. Okay. This in itself is tightening when you see those rates going up. Okay. Because you're not going to have enough people that's going to be able to get those homes. But those homes are crazy right now. We got people paying over $100,000 above bid price right now, pricing all kind of people out of the market. We talked about Wall Street buying up entire neighborhoods. All of this is a part of the whole socialist plan. Man, y'all don't understand. I don't have the Great Reset book close by, but I told you guys about the Great Reset book by Klaus Schwab, and it's about you owning nothing and you're going to be happy. I mean, this is what they're talking about. He's describing the whole agenda for COVID, to give the government its permissions to do all this shut down, lockdown stuff, and to do that to everybody. And they're just buying up all the assets, and everybody will be renting. Okay, that's what they want. You got to fight. You got to fight against that and own and take ownership. Import and export price indexes. You guys can see this. I don't even have to really go into the charts, but you can see this is going up. All right, this is all inflationary. All right, bingo, inflationary. All right. But the feds are constantly saying that it's transitory. So you have the markets believe any damn thing that the feds say. So, they don't bet against the feds. All right. But you can see all of that is, import and export, all inflationary. All right. And producers, they are holding on to dear life, trying not to pass it on to consumers. But they're at the place now that they got to pass those prices on to consumers now. Okay. We talked about the wage inflation situation. In fact, I don't even think I got the numbers up here, but the unemployment numbers came out, and we're seeing an uptick in, people filing for unemployment again. Okay. This is why I was talking about us being in a greater depression last year. When I was forecasting this depression, I was telling you guys it's going to be worse. I'll call it the Greater Depression versus the Great Depression, because nothing that the feds can do that can stop this. You feel me? In fact, the feds are going to be forced to move against itself because of their agendas, and it's a lot of political stuff that goes into it as well. What the feds should be doing is tightening, but they won't. And we go back to the charts. I'll show you guys right here. If we go back to the charts, you can see when they tried this. And this is on the website, by the way, this chart, you guys can pay attention to that. But let me just go back. Let's go back 20 years. All right. It's the yield curve for those that don't know. All right. So in the yield curve, this is how this is one of the tools that we use to predict a recession to come. All right. And in fact, what I want to do is I'm going to go back. Let's go back 30 years. 30 years of data. Yes, sir. 30 years of data. And then, all right, cool. All right. Let's just move these out the way real quick. All right. All right, those are my indicators. All right, cool. So check this out. All right. This is all the recessions right here. Typically, and I was showing you guys in the past, whenever we have a recession, the feds, they'll drop the rate just like this. And it's normally about 2 years. Okay. Normally about 2 years. This was like a year, 2 years. Okay. And then 2008 was the longest time frame that they kept those rates lower. I can go back, even further, 60-year charts, and you'll see what I'm saying is, consistent. Okay. Except for here, the Obama years. Okay. Presidents don't make the economy go up. The feds do. All right. And this is how they did it. They dropped those rates all the way down. See, they were at 5%. They had 5% to cut. Okay. And then they kept it extended for the longest time ever, for like 8 years. And then when Trump got in office, he had hired Powell, and then Powell started ratcheting those rates up because they were already overdue. See, Trump thought he was going to get that easy money like Obama was getting. It didn't work that way. So Trump started threatening. Powell was talking about firing him and all kind of stuff. He was pissed with the man. He's like, man, come on, man, you messing with the money. But they had to tighten those rates, okay, because they're going to overcook the economy. Now, in this time frame, people who bought houses and, stocks and all of that, they benefited, okay? But you got to remember, when people lost all their homes and stuff, when people lose credit, all right, it takes years to get that back. So this is how I knew that we never actually fully recover from the great financial crisis, okay? Because it takes time for people to rebuild credit and stuff like that, all right? But those were assets, got crazy rich when those things, because when this happened, all those foreclosures and things were happening, it created, opportunity, okay? And those who had cash, they went in and took advantage of it, okay? Now those people are selling those assets because we blew up a bubble that was bigger than the bubble back then, okay? And then we try to tighten up and raise those rates. They had a goal to hit 3%, and they never got there. This is the goal that they was trying to get to, 3%. They never got there, okay? They ended up having to cut the rates, and it started in, I think it was September 2018. We saw the repo market start to go crazy, okay? I don't have any charts and I don't have time to go through, but the repo markets is going crazy right now, but for the opposite situation that it did back in 2018. And the markets had a fit before, the crash. So now they got too much money in the system. It's crazy right now. They didn't have enough money in the system back then. This situation is because they got too much money in the system. So these are the things behind the scenes that people don't see, but all of this, when the house of cards, blow up, it's going to impact everything. Okay, so just keep that in mind. You probably started hearing more of that, in the headlines. But when you see the rates go down like this, boom, recession. Okay, all right. So you saw them go up and then they boom come down, and now we're starting to see a little bit of that now. Look at those rates; they're starting to come down a little bit. All right. So you see that coming down, and we see the short term is going up. All right. So we got to pay attention to this. It's not looking good right now. Oh man, Jonathan ain't here. I know he go with the trader almanac. They say sell in May and go away, but nobody says when to come back. All right. Well, right now ain't the time to come back. It is not looking good. No bueno right now. So I want to show you guys that so you can really understand this environment. Okay. Employer costs for employee compensation. You guys can see all of this is inflationary. Those things are going up. Here we go. Your man, Michael Burry, this is him on Twitter, okay? Right there. He said the problem with crypto, as in most things, is the leverage. If you don't know how much leverage is in crypto, you don't know about anything about crypto, no matter how much else you think you know. So there you go, chastising the crypto community. He says, all hype and speculation is doing is drawing in retail before the mother of all crashes. All right, I'm not the genius here. This guy is. You want to pay attention to him. I told you guys we got the movies, documentaries, and films group. If you haven't gotten to the group, you need to get into the group because there's a bunch of dope movies. We haven't even finished, loading up the library, but those are things that you guys can watch in the meantime, for entertainment, but you can also educate yourself if you really want to, take advantage of this game. Okay, if you here, so you're definitely hungry, but you got to, take it further, all right? But this guy here, this is the guy from Big Short, all right? This is the guy that called the mother of all crashes. That was a great financial crisis. Here you go again, all right? And he's talking about the mother of all crashes. He says, fear of missing out. That's what FOMO stands for. FOMO, parabolas, don't resolve sideways, okay? When crypto falls from trillions or meme stocks fall from tens of billions, Main Street losses will approach the size of countries. History ain't changed. Now, I told you guys last week what my mother told me, right? I told you, ain't nothing new under the sun. She said, son, ain't nothing new under the sun. So that's why I say history is a great teacher, okay? But this is the fallacy of the technologists. They always say, oh, it's going to be different this time. It's going to be different this time. It's never different this time. Like I said last week, my mom said, the devil ain't got no new tricks. He just got new faces. Same tricks, just different faces. I was telling you guys about that, right? A lot of technology stuff that people pumping now, man, they had back then. I told you guys, the guy, was it Wozniak from Apple? The guy had a smartwatch back in the 80s, okay? I mean, they had all the, the computer stuff. Xerox that's where, Bill Gates and Steve Jobs got all their ideas from. They actually went through a tour. They saw the computer, the mouse, and all of that. Xerox, they couldn't afford to keep it up. They already saw it, though. They didn't create it. Xerox already had it, right? Virtual reality, all this stuff, flying cars, blah, blah, blah. Man, listen, don't be believing all the hype, man. That's all I'm saying. All right. All right, cool. Bank of America's new inflation meter shows transitory hyperinflation. This link is up there. It's from Zero Hedge. It's actually really interesting, okay? Calling for hyperinflation. Michael Burry's calling for it as well. That's all you guys are going to be hearing in the news anyway. We've been talking about so much, kind of like, beating a dead dog right now, or beating a dog with a stick, I guess. Beating a dead dog with a stick. So that's pretty much it, for what we guys need to know here. Topaz came through with the article, the housing market is so crazy. This $600,000 horror is drawing multiple cash offers. This is what I was telling you guys, the housing market is looking crazy to me right now. And anyway, it's not going to be good. Anything but anyway, that's a good article she dropped in here. OPEC told to expect limited U.S. oil output growth for now. We see an oil, I showed you guys, but did I show you guys the oil? Let me show you guys the oil charts real quick. Let's show you the oil. All right, there we go with the oil. All right, we've been, calling this for a while. I'm gonna have to drop it down a little bit. Showed you guys the Goldman Sachs target. We're well beyond the Goldman Sachs target for the summer. I told you guys I was seeing $80 oil. My target is up here. All right, we're already at about $73 right now. We have to see what oil is going to do. It is overbought. Okay, it's overbought. Seeing the momentum starting to shift downward, but the price is still going up. Okay, so oil, constantly going up. Oil rising, that's a proxy for inflation. Okay, so that's another reason why we knew this was going to be an inflationary environment when they was talking about it wasn't going to be a problem. Okay, the thing is that they think that the inflation is going to go down. So, but again, they're playing a dangerous game because inflation is that genie that you don't want to let out the bottle because they can't, you ain't gonna be able to control it because if something mental happens when people start price chasing. And when people start price chasing, you're going to get hyperinflation. Okay. This is what happened in Weimar, Germany. Do your homework. Okay. Weimar, Germany, from the war, they couldn't do the reparations. They had to pay reparations. All right. Their money just became worthless. I mean, it was crazy. I mean, the prices of things are just changing so crazy that wives were going to their husbands' jobs, getting their checks to cash it before he can get off of work, just so they can go and buy things. You talking about paying, I don't even know, it's like maybe $100,000 for a loaf of bread. Yeah, like that's hyperinflation. It's ridiculous. Okay, the money just becomes worthless. So remember, people don't want money. People want what money can buy. Okay, people want goods and services. That's why money is a medium of exchange. It's just something that we use to exchange to get the things that we really want. Okay, whether it's now or sometime in the future. Okay, but that's all it is. And so right now you're seeing a lot of that happening where people are buying the goods and services. Okay, I just literally this week, and here go my receipt right here from GameStops. Okay, GameStops. I know y'all out there trading the stocks. I just got my receipt from getting the new Xbox Series X, okay? And it was crazy for me trying to get that. I couldn't get my hands on it because the scalpers just sweep them off and resell them for $1,000. I don't want to pay $1,000 for a $500 console. You ain't about to get me. So I, had to put my eyes out and ears in the streets and made some moves. But that's what people are after, okay? I couldn't figure out why they were sold out in the first place. And then I figured out that, okay, the government is giving people like an extra $300 a week. So they got all this extra money. They're getting the things that they want, the goods and services. They're not saving, okay? They're buying things up, stuff. That's what people want, stuff. You don't want money, you want stuff. Sir, so you trying to get a PlayStation 5? Hey, man, the PlayStation 5s and all of that, man. Walmart had them on Friday. Yeah, I think, but it was like a 10-minute window, man. I got tipped off like 10 minutes. If you didn't get it within 10 minutes, you ain't gonna get it. Yeah, they snatch them up, man. So, I'm talking about, I literally, when I got the tip off, I put them in my cart. And as soon as I'm trying to pay for it, boop, not available. So this is the type of extreme stuff that we're seeing in the markets right now. So I wouldn't be surprised if we see hyperinflation, but just know that we don't want to see hyperinflation. So it's nothing that I want to see, okay, not in my lifetime. If you read about this stuff, they were paying people, millions of dollars. So here you go. You got millionaires that are broke. This is how you have millionaires that are broke, because you're a millionaire in currency that can't buy shit. So what good is that? Looking at Zimbabwe, I mean, this hyperinflation shit is real. I know a lot of people don't care because the school system don't educate us on this, but that's why we got Wallstreet Jackboyz, so we can all learn the game. So basically, what happens when people start chasing prices, that's what you got to start doing. And they're buying commodities, things that you're going to need in the future, okay? You saw what happened when the crisis happened. People was buying up all the toilet paper. I'm in a store, there's no tissues on the rack, and this old lady, she's like next to me, and she looked like she just woke up and got out the house, like she don't even have a TV. I'm pretty sure she didn't know what was going on. She was just like, oh my God, there's no tissue. And I was like, wow, that's crazy, because I was thinking, people probably don't come out until they're out of shit. So, wow, that's going to be messed up for her. I had to use the leaves, baby. But so what people are doing, they just buy it all up. You buy it in advance. Buy all the things that you need in advance, okay? You see people buying up all the oil, just loading up, because, we had a shortage in oil a couple of weeks ago here where I'm at. And so, what happens to people psychologically is they remember that. That's a pain that they're not going to forget. So, once things supply, this is all these supply chain shock issues and stuff. Powell was talking about some of it in his meeting this week. But, once that supply starts to come back, man, people racking up. So that's what smart money is going to do. Go ahead and get all the things that you need now that you know that you're going to use, stockpile it. That's the strategy, But that's what also causes hyperinflation, okay? Is when people have that mentality of getting things before the next price change. You got to get it now. That's what I was doing. I'm trying to get my Xbox before they run out, and then I'm forced to go and buy it for $1,000. Now I'm getting that now. You feel me? And it causes, when you have everybody moving like that, that's when you get hyperinflation. So just keep that in mind. All right, gang, I've been talking your heads off. Let's take a look at some of those stocks that you guys got, and then we'll call it a night. What y'all looking at? What you got popping? All right. Squeeze Finder got Roku over here. Okay. All right, we got Roku up in here. Starting to look like an inverse head and shoulder. Okay. All right, you can see that. We're already in position, if you was in the trading room. Bingo. Okay. The setup looks something like that. Okay. So it's starting to look like that. I am bullish on this. We'll just have to see how it plays out. All right. Arrow's going up. Stochastic is going up. We got a squeeze is popping off. Trend is up. All right. We're trading above our moving averages. All right. So positive on Roku there. What else y'all got? Y'all got something else? What else? What we got in here? Terry, what you looking at? Sid, what you looking at? Serge, my man, I ain't seen you in a minute. Serge, what's good with you, Playboy? All right. Mama Mia, what you got? Anybody got anything else that you want to take a look at? I know Dustin was just in here. He gonna straight up hit me up on Facebook like, hey, what you think about this play? You were in here. Drop it in here. Okay. Drop it in there. Send me an email. Let me know what you want to look at. What's interesting though, let me just take a look at gold real quick while y'all figure out what you want to look at. All right. This is the crazy sell-off in gold. All right. This crazy sell-off in gold was nasty. Super nasty. That was looking like one of those Bitcoin sell-offs. It was like textbook though. Double top flops. Look up, rip through all the support. Okay. And good thing I didn't clear my chart. So I still got this line here, this Fibonacci 618, that's holding up as a floor. Okay. And we can see, according to the stochastics here, that there was a complete overreaction of the markets. And so it's starting to look like it's going to come back up, reverse. So we got the squeeze that was right there. Squeeze fired short, boom. So you got all the red, and then we start to see the momentum turn yellow. Then this should hold up as a floor. And we see gold chop a little bit in here so that the traders can actually see that it is a clear floor before it goes back up. Okay. So I did want to cover that as well because I forgot. I know people was asking about that. Yeah, gold very interesting, but it's a good price, 1,700. And the thing is, you got to understand is that inflationary. Normally, gold is the hedge. Okay, but this is a psychological thing that's happened, psychological phenomena. Okay, why did gold sell off? Is because the markets believe the Feds are going to raise the interest rates. Okay, so because they believe they're going to raise the interest rates, they sold off. Now, that's the thing. And I told you guys before, okay, what my man Peter Schiff says, he says, if you have a headache and a handgun is your only aspirin, will you use it? Okay, so this is why they call them the Fed's bluff. Like, they can't raise the rates because it'll be catastrophic for the economy. Okay, and if Powell raised rates under Biden gonna fire his ass. Trump was already gonna fire him. You gotta remember, Trump nominated him. Okay, so I don't even know what his political affiliation is, but you have to count his days. But maybe Powell's tired. What I mean? Maybe he's too stressed out, man. He don't give a damn. He's ready to get fired. You know what I'm saying? But I told you guys, man. Like the Feds, they always say this, and it's crazy that the markets believe them because the Fed said the same thing under Trump, that they was going to get rates up to 3%, and they never got there. They had to revert. They had to reverse the course. Okay, right. Okay, so you're just going straight with the indexes. Well, again, I showed you guys the S&P 500 earlier, looking negative. So I don't know if you're looking short the SPY, but that's what's looking like it's shaping up. So equities not looking too good. Coming in this week though, again, it's probably going to be more day trading like we saw over the past 2-3 weeks. More of the meme type stocks. Okay, GameStop, AMC, a lot of those weird names. If you're in the chat room with us, when calling out the plays, seeing what's shaping up in the markets, I got a really nice, unusual options activity scan that I'm actually, trading off of. And I share that with you guys. Just, hop in the chat room and then just ask us about it, and we'll get that over to you. So whatever you need, man, we got that for you right here on the website. And again, check out the Legends and Gurus group right here on the side. You feel me? Just go up in the Legends and Gurus joint and educate yourself. You feel me? Pick and choose any guru that you care about, want to know about, okay? And they are right here. You can see, all these gurus or anybody that you're interested in. If you want to add somebody to the list, let me know and we'll get them added to the list. But the new group for the week, I told you guys about the documentaries group. Make sure you check that out, which is right here, movies, films, and documentaries. Make sure you check this out. Okay. And I'm going to go to the discussion so you guys can see that. All right. And you guys could actually share any movies that you've seen that were, financial or economic related that you think that, everybody else could benefit from. So here's a lot of different things. I don't know if you did your research, your homework, but once you watch the movie, I would like for you to come in and choose any of these titles, watch one tonight, and then give a review. All right. Give a review of what you think, your thoughts. All right. That would be great. The website itself will reward you. All right. The links to those movies are in here. You can actually just go in and click them. Let's go to the isms, about the isms. All right. This is a good one right here. The deadly isms. All right. You can click the links. You can go straight there. But these are resources. Okay. So the website, again, this is your tool. You need to use it. Before I bring it to a close, let me cover earnings coming up, which Topaz did drop off in here. Homelessness is becoming a crisis. Here we go. You see all this cheap money stuff, but homelessness is going up. This is what I'm saying. They can't fix this. All this intervention. The economy is tied, y'all. It's tied. Not tired. Topaz knows what I'm talking about. It's tied, okay? It ain't tired. It's tied, all right? That means it's extra tired, all right? So the economy is high on all kind of dopamines, all kind of heroin, and it's overdosing. It's getting ready to lay it down, all right? Topaz came through and blessed with the IPOs. For you guys who want to know what's coming down the pipeline, check that out. She got the gold at Walmart. All right. Interesting. Walmart spazzing out here. We got the gold and silver group. If you guys want to check out right here to the side, gold and silver group, you can, check out some great places that I actually buy mine from. But hey, if Walmart got it, I wonder if they got the lowest prices around. Okay. That'd be interesting. Low price. It says low prices. I'm going to have to go and check that out, Topaz, because I could definitely add some more gold at these lower prices. Monday is going to be empty, so you guys don't have to worry about nothing as far as earnings on Monday. Power plug, PLUG, that's going to be a name that the markets is going to be paying attention to on Tuesday. Not so much of the other ones. Let's see, Winnebago, the IHS market, that's going to be on Wednesday, and KB Home after the close. Let's see, Thursday. Darden. Okay, so Darden Restaurants is going to be in there. BlackBerry. How many of you guys knew that BlackBerry is still out? That's one of the meme stocks. Okay, so BlackBerry's out there. Carnival. Everybody's getting their cruise on right now. So we'll have to see what that's shaping out like. Nike. My daughter is crazy about Nikes. Anyway, so Nike is going to be a big one. Rite Aid also. So Thursday looks like it's going to be more action packed than anything, and then Friday we get CarMax and Paychex and Apogee. So those are the ones that's popping down the pipeline for that. And let me go up to the calendar here. On Monday, the Federal Reserve of Chicago will release its National Activity Index. Okay, so that's going to be some economic data on Monday from the Federal Reserve Bank. Tuesday, the National Association of Realtors reports existing home sales for May. So we get a little more insight on what's happening in the housing market on the 22nd here. Wednesday, we will have the Census Bureau report new residential construction data for May. Also, some more housing data. The IHS market reports both manufacturing and services purchasing managers index, that's PMI. Okay. Expectations are for a 61.5 reading for the manufacturing PMI. And a 69.8 figure for the service PMI. Okay. So anything above 50 is inflationary. We're going to see more inflation. Thursday, the Bureau of Economic Analysis, that's the BEA. They will be actually reporting their third and final estimate of the first quarter GDP growth. Economists forecast a seasonal adjusted annual growth rate of 6.4% of growth. Okay. So we'll see what that looks like. And again, growth is there. Okay. But is the economy really growing? GDP is dead. Anyway, the Census Bureau released the durable goods report for May. Bank of England will be reporting their monetary policy decision. Central bank is widely expected to keep its key interest rate at 0.1%. Watch your Forex market over there on Thursday. Friday, BEA reports personal income and consumption for May. Income is expected to fall 3% month over month. All right. That's going to be interesting because we're seeing wage inflation, but then at the same time, income falling. It's going to be interesting to see how that plays out Friday. But that's it for this week, gang. Y'all know where to find me at. I'm right here on the website, our home, Wall Street Jackboyz. Stay a little bit off of your Facebook. It's toxic. Stay a little bit off the other social media. Come home, Wall Street Jackboyz. Interact with your peoples, connect, you feel me? And, we get it how we live right here in the chat room. All right? Chat room right there. All right, gang. I appreciate that, man. Listen, y'all have a good night. See y'all in the markets tomorrow. Peace.